Hello traders, Gary Wagner here. Approximately 10 a.m. in Honolulu, 3 o'clock in New York City. It is Monday, the 9th day of July, 2012, and this is the daily report for gold and silver. Nice showing for the precious metals today. Currently trading about $5.50 higher on gold. Currently at 1588, 1587 bid-ask spread. It has had a low of 1579.10 and a high of 1594. Silver up about 28 cents, 27.48, low 27.01 and high 27.62. Traders, we are looking at 420-minute charts of silver on the left and gold on the right. You can see that on our Heikin Ashi, meaning our Japanese average charts, we have gone really solid green over the last trading sessions, and we are seeing some classic signs of potential bottoms in the marketplace, and I do expect to see some sort of a nice rally off of these moves here. Now, traders, have gone ahead and really condensed the 420-minute gold chart, the Heikin Ashi. We'll go ahead and blow it up so we can look at colors and the actual candles themselves in a second. But the reason for me bringing this up in this way is what I'm noticing is if we take this bottom right in here and we create a trend line, so to speak, you can see that we have had a succession really of higher lows, and I'm speaking specifically of the recent low compared to the low back of about, say, middle of May right in here. That's the positive side of the fence. On the negative side of the fence, when we take a look at it, we are seeing a consistent real resistance area right in this 1630 to 1640 area. We truly have some real resistance there. Traders, I've gone ahead and blown the 420-minute Heikin Ashi chart back up, still looking at gold. And really what we can see in this chart also that I kind of want to point out before going into our next chart of the show is that we are getting really the classic signs that we look for bottom activity, and that's that pivotal candle, that doji-like candle that you tend to find right before you get the color change, of course, this being green and the prior one being red. You can see that also here on this bottom. You go red, you get this pivotal candle right here, this small body doji, and then you go to your green. Notice the absence of the lower wicks right in here as the market accelerates. Notice that they kind of start appearing again as the market kind of loses a little bit of steam, but then as it gains steam again, it loses it until it moves sideways. And of course there you've got that pivotal candle. We tend to get these pivotal doji-like candles when the market is set to reverse. You can see them here. You can see it here. They'll really be prevalent. Now, they don't always appear. Here you get small body candle, but not as classic. Here you get a very, very classic kind of a doji, but then the market takes off again and before it moves back down. But you can see that prior to a market really taking off, in many instances, not all instances, what you will see is that pivotal candle. So we're always looking for that, and when we see that, I believe that it gives us some true insight into market momentum and market change or shift in direction, a pivot point or reversal point. Traders, we touched upon this a little bit last week, but I wanted to kind of revisit this one chart here. This is, of course, a daily chart. It is of cash market in Heikin Ashi format, and it does have an Elliott wave count to it. A couple of things have become quite apparent. When we look at this, really the long-term trend line that we have always maintained and put into the market, as you can see, no question that was violated. In other words, we broke below it, as you can see, right in this area. That being said, though, when I took a fresh look at this, I kind of put Elliott wave count away and then came back and took a fresh look at this last week. I really believe that there is a case for the fact that we are in a compression triangle correction, and even though we broke below it, I think that there is a valid case that we are witnessing this kind of a flag formation right now, this triangle formation. If that is the case, as we came up and we hit 5, this doesn't touch, we would have 1, 2, 3. We would get a fourth then a fifth, and then a thrust. The thrust, of course, would indicate the beginning of a new Impulse Wave 5. It would be a major 5, as we are, according to my count, completing or still in a corrective wave 4. And in terms of the major count, this is a real big picture cycle, because as you can see, it begins right after the correction when the market was trading below or just around, call it $700 an ounce, and went from 700 to 1900. And the long count itself goes 1, 2, 3, this would be 4, and then a fifth wave up to conclude that impulse part of this extreme super bull cycle. Traders, we're looking at a daily chart. This daily chart is July silver, and it is in candlestick but Heikin Ashi format. A couple of things that we want to take a look at. The first thing is, it does appear as though this triple bottom, well, now we can almost call it a quadruple bottom, has actually held. And the other thing that we can see that I find is interesting is that when we go ahead and blow the chart up, let's go ahead and do that, you can really see on a daily chart how the Heikin Ashi, the Japanese average charts, are truly a lagging indicator, because you notice that on the, call it quarter bar, meaning about 4 bars per day, the 420, we definitely went green. Here we're still red, but you can see the body size is truly shrinking at this point. And if we get a continuation, of course, of this rally, it will go ahead and turn green. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.